What is up, future CPAs? Welcome to this explainer. Look, if you're a BS accountancy student right now, just staring down the barrel of taxation, you are in exactly the right place. Today, we aren't just memorizing, we're building a 3-year retention mental framework. Think of this explainer as your ultimate study hack, your absolute cheat code for locking in the trickiest estate tax rules so firmly you'll still remember them when you sit for the LECPA. So, ask yourself, are you ready to hack the absolute most confusing parts of estate tax? We're talking about those specific pain points that examiners literally love to throw at you on Quiz 10. We're going to use active recall and structured visual schemas today so that your brain naturally categorizes this data instead of just blindly memorizing it. Let's prime those brains. Here's your level up roadmap. We're going to start by cracking the non-resident alien code. Then we'll hack foreign tax credits, nail down those filing thresholds, explore the new EOPTA venue rules, master the eCAR, and finally, lock it all in with a Lex CPA bullet review. All right, level 1, cracking the NRA code. Okay, the absolute best way to master estate tax is by isolating exactly how non-resident aliens, or NRAs, are treated differently. For a resident citizen or a resident alien, the standard deduction is a massive 5 million pesos, but for an NRA, it's just 500,000 pesos. You really need to permanently link the term NRA in your brain with that missing zero. They do not get the 5 million, ever. And actually, speaking of zeros, this is a classic board exam trap. Examiners are going to give you this super long, complicated problem about an NRA decedent who had this gorgeous family home in the Philippines, plus retirement benefits under RA 4917. Do not fall for it. The deduction for an NRA's family home? 0. The deduction for RA 4917? Also 0. Only resident citizens and resident aliens get to claim those. So that brings us to how we handle ordinary deductions, what we usually call LITE. Losses, indebtedness, taxes, and so on. Because an NRA is only taxed on their Philippine properties, their ordinary deductions have to be prorated. It's kind of like a giant puzzle where the pieces have to match perfectly. You take the Philippine gross estate, divide it by the worldwide gross estate, and then multiply that by the total LITE. This fraction is basically the bridge between their local tax burden and their global wealth. Definitely lock that formula into your head. Moving right along to level 2, foreign tax credit hacks. Before we even think about touching a calculator for foreign estate tax credits, you have to remember the ultimate exclusionary rule. Who can actually claim it? Only resident citizens and resident aliens. If a multiple choice question asks you to calculate the foreign tax credit for a non-resident alien, well, the answer is always 0. NRAs aren't taxed on foreign properties, so logically, they don't get foreign tax credits. Boom, moving on. Now, if your decedent is a resident or citizen, here's how the math logic works. You basically have 2 limits. For limit A, you compute the ratio of the net estate in one specific foreign country to the entire worldwide net estate, and then multiply that by the Philippine estate tax. You do this for every single country. Then you sum up the lowest allowable amounts per country. After that, you compare that sum to limit B, which groups all foreign countries together into one big bucket. And the golden rule here, you always take the lower number. The BIR is only ever going to credit you the lower amount. Okay, level 3, filing and CPA thresholds. Let's shift gears for a second and talk about strict compliance rules. I really want you to burn this number into your visual memory. 1. You have exactly 1 year from the date of the decedent's death to file BIR Form 1801. Now, what if you need more time? Well, the commissioner can grant an extension, but it's really tight, only a maximum of 30 days. So your baseline rule is always 1 year to file. And here is your magic threshold number, 5 million pesos. You need to stress the absolute importance of this in your notes. If the gross estate hits over 5 million pesos, a simple return just isn't going to cut it. A certified CPA statement detailing the assets, deductions, and tax due becomes totally mandatory. So if you're solving a problem and you see an estate valued at, say, 5.1 million, immediately look for that CPA certification requirement. Next up, level 4, venue and payment extensions. Let's tackle the logistics of exactly where to file, and we're focusing specifically on recent EOPTA updates here. Before the Ease of Paying Taxes Act, filing in the wrong city meant getting hit with a massive civil penalty. But guess what? That wrong venue penalty is officially gone. Now, taxpayers can file anywhere using 3 authorized channels: an authorized agent bank, a revenue collection officer, or an authorized tax software provider. This is a highly testable update, so make sure your brain has downloaded the latest software patch on this rule. But what if the estate doesn't have the cash to pay right away? Honestly, it happens all the time. The commissioner can actually grant an extension to prevent undue hardship. If the estate is being settled in court, which is a judicial settlement, you can get an extension of up to 5 years. But if the heirs are settling it privately, an extrajudicial settlement, the maximum extension is only 2 years. So remember, 5 for the courts, 2 for out of court.
Almost there. Level 5, disposition and the eCAR. We're in the endgame now. The absolutely crucial point here is the partial disposition cheat code. Say the estate is huge, right? But all the value is locked up in the land, and there's literally zero cash to pay the tax. Well, you can actually sell properties piece by piece. First, you file a written request with the BIR. Second, you pay the proportionate estate tax specifically for the property you're trying to sell. And third, the proceeds from that sale must be used exclusively to pay off the rest of that massive tax bill. And this brilliantly illustrates why that whole process works. Because it all revolves around one thing: the eCAR. The electronic certificate authorizing registration is the ultimate gatekeeper. You literally cannot legally transfer ownership of registered land or shares to an heir or a buyer without it. And you can't get an eCAR without paying the proportionate estate tax first. It's basically the BIR's ultimate leverage. Finally, Level 6, the LECPA Bullet Review. You've made it to the final save point. It's time to leverage some spaced repetition and really lock this data in. Think of this as your 3-year memory anchor. Okay, NRA standard deduction, 500,000 pesos and no family home allowed. LITE for NRAs, prorated based on Philippine over worldwide gross estate. Foreign tax credit, resident citizens and resident aliens only. Filing deadline, 1 year. CPA threshold over 5 million pesos. Payment extensions, 5 years judicial, 2 years extrajudicial. And the eCAR, completely mandatory to transfer property. If you can clearly visualize these concepts during your exam, you are going to be golden. So, future CPAs, here is the big question. Are you ready to deploy these hacks? You now have a solid, structured schema to not just pass a quiz tomorrow, but to retain all this complex data for the next 3 years until you actually sit for the LCPA. Keep visualizing these concepts, keep practicing the active recall, and you are absolutely going to dominate the taxation board exam. Keep studying smart, and I'll catch you in the next explainer.